What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on oil.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you what is this ETF about. Then I will show you what fundamental news might drive the price of this asset. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So first of all, let me show you that this is basically the leveraged ETF on natural gas, and definitely we have quite harsh movement to the downside for the last several months and even for half a year. And this asset, as you can see, have this type of curvature. On the one hand, it doesn't show anything, but on the other hand, we have a lot of fundamentals that might add a trend reversal on this price chart. But everything I will show you in my technical analysis. And for now, let's continue with the fundamental news. First of all, let me show you the natural gas prices. And we have this ticker symbol natural gas futures on NYMEX. And right here, as you can see, if I zoom out, we have a very harsh movement from its highest point that was set at the end of August 2022, and from its highest point to its lowest point, this asset lost about 80% of its value. And definitely it is extremely harsh movement to the downside. And let me show you that from the technical standpoint, right here we have a very good range of support, but everything in just several minutes. And let me show you this news. If you click on this icon, you can find on TradingView the latest news directly related to this asset. And let me show you this news. European Union unlikely to face natural gas shortages next winter, market talk. And let me quote this. The European Union should need to buy much less gas than usual to prepare for next winter, making it unlikely it would face shortages even if there is a little Russian gas to replenish storage facilities, economists at Berenberg say. The EU has ended the heating season with gas storage at 56%, well above the 26% registered a year ago, they say. Colder weather could bring a more adverse scenario, but the economists assume that the EU won't consume much more gas because companies have adjusted their energy mix and households continue to refit their homes in response to still high prices. Short of a highly unlikely combination of adverse risks, the EU should be safe for the next winter, Berenberg says. And definitely 56% of gas in the end of the year in their storage facilities. Definitely it is a very promising number, but in general we have to correct the market. And I'll show you another article that is describing quite interesting pattern. We on realmoney.com, and this article was published on April the 1st, and it says $2 natural gas is temporary, just like $10 natural gas was. And let me quote you several paragraphs. The United States is making more gas than ever. This is a byproduct of historical heights in 2021 and 2022. The rule of thumb is in commodities is that high prices bring supply. That truth has never failed. In the case of energy production, that supply is often slow to come. But when it does, the market can easily get flooded, particularly if demand isn't strong enough to justify the sustainability of a lofty price. While this pattern persists perpetually among all commodities, it is more extreme in natural gas relative to most. Unfortunately, for gas bulls, warm weather dampened winter consumption, and despite a few head fakes, the Freeport LNG terminal hasn't been able to get on its feet. The terminal has partially reopened after suffering from an explosion last year that put it out of commission. But the reopening process comes with a lot of red tape that acts as a crowbar in the wheels of progress. I am not offering an opinion, just stating the reality. So, definitely we have a lot of bearish pressure on the natural gas itself, and let me show you the price action right here on TradingView. And before we dive deep into the technical analysis, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let me show you that this asset from its highest point has quite good price action. let me show you this range. So from its highest point we have several waves, and in my opinion this is an ABC correction. This is the A wave, this is the B wave, and this is the C wave. Probably it might be right here or right here. And if it is the case, we have to have 5-wave structure in our C wave, and we pretty much have it. This is our first wave, this is our second. This entire wave to the downside is the third one, probably this is the fourth, and we are in the flat consolidation phase that probably will complete the forming of our fifth wave. And if it is the case, and I have to say that we have quite strong range of support. Let me show you that it is a double bottom pattern at around $2 price point, and $2 also is a very good psychological number that this asset didn't hit for quite a long time. If I switch to daily time frame and zoom out a little bit, let me show you that previously this asset was at $2 mark somewhere in between 2020 during the pandemic hit. But right now we know that pandemic is pretty much over, and we have an increasing numbers in economics. Definitely right now we are experiencing some problems, some recessional problems, but it is not for a long time. And technically this asset should complete its movement to the downside, and this means we have to see at least a bounce. And this bounce definitely happens with the natural gas futures itself, but I want to pay your attention on BOIL. It is a leveraged ETF, and let me show you that this asset is even more undervalued right now because it is at extremely oversold condition right here. And let me show you quite bullish sign. As you can see, this drastically increasing volume, and this shows the interest from the major investors, from the hedge funds and other companies who want to hedge their position in natural gas. Definitely they want to see the bounce to the upside as well, and that is why we have this increase in volume. On top of that, historically speaking, April is more bullish month than bearish. From 2015 till present day, in 60% of cases, April was a green month, and only in 30% of cases it was in red. And this means we also might have the movement to the upside that will unload its structure. So let me show you this structure in details, and let me show you what should we expect in upcoming weeks. So let's do it like this, and let's switch to hourly time frame. Right here you can see the latest movement from its swing low on February 21st. It had quite good movement to the upside, but then it had a very harsh drop. And first drop and first bounce to the upside was the sign of potential another ABC correction, and it was something like this, with anticipation that C wave should land somewhere in the ranges of 1-to-1 extension. And let me show you what I'm talking about. If I pull the Fibonacci extension tool from its swing high to this swing low and to the top of the B wave, the 1-to-1 extension is exactly right here at $4 mark, and it is another psychological number. And as you can see, this asset had a perfect bounce to the upside from this range, but then it broke it to the downside. And this movement to the upside brought about 20% of profit in the short-term perspective. And right now we have all chances to repeat this pattern. And this means we might see the next bounce, and this bounce should be confirmed by the volume. And here is quite interesting detail. As you can see, the range of about $3.28 has quite good support as well, and right after that we have the volume that is almost the same that we have right here. And this means, if it is the case, we might anticipate the trend continuation that will hit higher targets. And if you want to enter your position, you can accumulate it right here with the tight stop loss slightly below this bottom, which implies the downside potential of about let's say 9.5%. But the upside potential, and let me clean the chart, I don't need this tool and this tool as well. And the upside potential might be quite massive. Let me put it like this. And if I pull the Fibonacci retracement tool from its highest point to its lowest point, we have to hit at least 0.236 Fibonacci retracement level at the price point of $4.34. Next range of resistance might be at $5 mark, and definitely these two ranges might be quite lucrative, because we might have up to 22% to the first price target, and it is another confluence range with this previous swing low, and about 42% to the second price target, to the round number of $5 mark. And definitely it is quite good upside potential with less risks. And if you want to see more this type of trades, just hit the like button, subscribe to my channel, hit notification bell, and see you guys and girls next time. Bye.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.